Company law, you may comply 100%. Permission, everything would have got taken. But once the profits are there, to the extent the advance relates to the profits, it will be the income in the hands of the person who receives this. So deemed dividend. So there is a prohibitive, say, section in the Income Tax Act. But as far as the accountancy, you are asking simply how the loans will be accounted debit credit only. Implication in the Companies Act, number of sections are there, restrictive sections are there. You cannot take without permission, all these sections are there. So they are there in the new act also, loans to directors, many stringent provisions are there, the Companies Act provisions, Dhanapal can.
No, as I told you before I explained, there is no separate implication or violation with respect to accounting alone. When the transaction itself is a violative of the provisions of the Companies Act, then the recordal alone cannot be taken as a offence. The whole transaction put together only will be taken as an offence.
In fact, even in the present Companies Act, the director, the moment it is a violation, he is holding the money as trustee.
But there is a separate penalty is provided under section 185 itself. So, yes.
Sir,
I'm not.
Depreciation, wherein the useful life was talked about. Sir, now in case of educational institution, there's a guidance note. It talks about the depreciation rates at which assets have to be depreciated. So in that case, as of now, Schedule 14 will apply or depreciation as per the guidance note. And when the new act comes with this guide, what will be the significance of this guidance note?
You are talking about CA Institute guidance note. CA Institute guidance note mostly for non-profit organizations. So it is not talking about, you are mentioning to the schedule only in the present Companies Act, section 25 companies are non-profit companies. Except section 25 companies, no other company is a non-profit company. Every company is a profit objective company only. In case of non-profit company, now the present act, if you talk now the present scenario, forget about the CA Institute. What the accounting standards this act gives only is binding. All other, as if it is a non-absentee class, CA Institute accounting standards, CA Institute guidance note for that matter, you have to ignore. Once it is a limit, section 25 company, similar section 25 company in the new act, definitely that you should forget. Only for the compliance, you should go by the standards and depreciation prescribed under this act only.
Just to add what Chairman said, the guidance note is a prescription for an education institutions, and there are two categories. One is a section 25 education institution other than section 25, like a society or a trust. And the society or a trust education institution, they can continue because that's only a guidance. They can take the guidance of application of the depreciation methods and the rates from the guidance notes prescribed by ICA. But as far as a section 25 company, they are coming under Companies Act and they will be governed by the useful life regime only. Yeah.
Adding some point to Mr. Raju's. Earlier, the accounting standard was recognized and presumed as a part of the Companies Act. Now, under the new act, not only the accounting standard and as well as auditing standard, both going to be the part of the law, as long as, because now auditing standard compliance also becomes mandatory along with the accounting standard. As you were referring that guidance note, as it is only a guidance to ensure the members of that institute following that parameter in addition to the requirement of the Companies Act.
Good evening, sir.
Sir, fine, sir. Any guidelines by any institute, I am telling 3 institute, anything can only add, it can't subrogate any of the provisions. It can't supersede, then it will become a violation of the provisions. It can only add. Even if audit report also, which I can share here, the SAS 700, 705, 706, based on that, the Audit Institute, the ICA came out of the revised format. In fact, immediately when it come, we have checked with the whole provision of the act and the draft. In fact, everything is only added. Nothing is taken away from the provision of Companies Act. The same thing which is required as per the provision of section 227, the format and matter, how it is required to be presented by the statutory auditor of the company in compliance with the Companies Act. In addition to that only, certain things is pulled or borrowed from SA 700, 705, 706, then put it in the audit report and made their format and ensured or advised the members to follow it and made as an independent audit report. Independent audit report is not a parameter prescribed under the Companies Act, but it is an additional parameter prescribed by the institute by virtue of the auditing standard. Anyway, now that also going to become law under new act.
Closely held public limited companies, they also need to have an independent director. Is that what the
Yes, if they fall within the threshold limit of the share capital turnover, they also need to have an independent director.
director provide is fulfilled?
Yes.
That's right.
There is a requirement of a women director, there is a requirement of an independent director. Both the threshold limits are more or less the same. That's why it may serve the purpose to appoint the woman as the independent director if she's able to satisfy the requirements of being appointed as an independent director.
Good evening, sir. My query is on appointment of auditors, sir. Before I go to the query, I will just give a small brief, sir. We had to take over a government company wherein auditor will be appointed by CAG. So, in May, that company has conducted their AGM and they have passed a resolution saying CAG will appoint the auditor for year 13-14. So, what has happened? Somewhere in August we have taken over the company, but CAG is yet to identify the auditor for the company. So effectively when we took over the company, CAG is yet to identify who is the auditor for 13-14. So after we have taken over, CAG has announced auditor's name. Auditor has given his audit report up to the date on which we have taken over. And now we are ready to have our own auditor. When we have taken over, company has lost the status of government company. So today, I am yet to get the resignation from the auditor appointed by CAG. So I am not in a position to appoint a new auditor from my side. So my query is, sir, can I retrospectively appoint the auditor from today, calling it a casual vacancy? When I get the resignation from the CAG auditor now, practically I have not received it yet. So today when he gives it, can I do a general meeting and say there is a casual vacancy and appoint my auditor for the remaining part of the year? That is query number 1. And
Query number 1 itself, too much.
sir,
That itself we have to understand better to answer you.
yes, sir.
Okay. Let us not dilute anything on that.
Mr. Ramana Rao garu. Sir, you can take mic, sir.
I experienced this. We were the joint auditors for Hindustan Zinc Limited, which was a PSU, and subsequently on 5th April, the government sold to Sterlite majority of the shares, and we thought since for March 31st, we signed the balance sheet when the management was in the hands of the Sterlite. So up to 31st March, it was a government company. And then in the AGM, Sterlite appointed their auditors. And one of the joint auditors, the auditor who was appointed as per our institute code of conduct, he wrote letters to us and we were 3 joint auditors. So, of the 3, 2 said, good luck, you go ahead to them. And third auditor said, no, I object, because you, during the year, see, till 5th April, Hindustan Zinc was a public limited company, the PSU. So, that appointment has to come from C&AG. And the matter was referred to the company law board and then C&AG, and they concurred with the third dissenting auditor, and because of him, we got an extension. We did the audit for the next year. So, my friend, that will be a thing. You can't do it. You have to live with that auditor for the year.
Sir, means he is ready to resign as on the date. Suppose he is ready, can we say it is a casual vacancy and fill it, sir?
Yeah, that is possible. Once he resigns, it is possible.
Auditor is ready. So, my query is, suppose auditor is resigning on the previous date. Can I appoint a new auditor from that date on today, sir?
My friend, whenever auditor is giving resignation letter, after his resignation letter dated only, you can appoint another auditor.
Sir, if a private limited company is falling under the definition of small companies during the year 13-14. From the year 14-15, it is coming out of the definition. That is, turnover is increasing and also the capital is increasing. In that case, whether the present auditor can continue for the next 5 years or he has to immediately resign.
Can you come again, madam, please?
For the present financial year, the company is coming under, falling under the definition of small company.
Falling under?
Small companies.
Small company.
So the present auditor has already audited for 5-10 years. Next year, it is coming out of the definition. Maybe the turnover is increasing and also the capital is increasing. In that case, whether the same auditor can continue for the next 5 years or he has to resign.
Every year, probably that ratification, all that, for this reason only, changes, all that.
No.
We have.
No, whether it has to be considered or from the first year, now the first year starts and next 5 years the same auditor can continue. That's my question.
No, madam, whenever the event date, when the appointment has to take place, we have to see the legal position of the company.
Rotation of auditors and things.
Yes, when it is becoming a big company, you said a smaller company is becoming a big company.
Okay.
So, as a smaller company, no rotation is applicable.
Yes.
So, from the moment it becomes a big company, from that date
So
onwards,
from that
starting
date,
counts.
5 years.
Rotation period will start counting. That's all, as simple as no problem.
Good evening, sir. This is Venkat Raman from Market Group, Chennai. I have one practical problem asking regarding the 2931D. Now in new act it is 181C, which was earlier exempted to private companies. Which talks about power to board to borrow money. See, earlier if it is exempted, so we have borrowed in excess over and above the limits specified therein. It has been already notified in 12 September 2013. See, okay, now it is in violation. Now what has to be done by the company? Now if it has to pass resolution, or you can say that before that enactment of this year we have borrowed. So suppose I am giving a scenario, it has already borrowed over and above specified the limit mentioned in the act. Till the end of the March, that is 31st March 2013, it has not borrowed any new loan. After that notification, I'm asking.
Better you can explain one by one.
Okay.
If you give like a story, we will be forgetting the beginning of the story.
Okay.
See, your problem is you breached the provision of the section 181.
C,
Because,
181C.
Yeah, because of the introduction of the section with effect from September 12. September 12, anything done in violation to the section 181 is a violation, correct? Anything done against the provision of the section 181.